So here is a small tip on how to prepare a cash book using Excel. That is when you want to track how you are paying some money that you have, or how when you want to track your money, in short. So I'll start by putting the date, then the item description, and then we say maybe receipt or voucher number, and then we say cash in, cash out, then we say balance. So these are our headings, and now to start with, we're in the month of February, so let's say maybe the date February. Let's say now we are starting to track the money from 1st of February. So on 1st of February, assuming you had already started it in January, on 1st of February we will say opening balance. This is the balance that you came with from January. We are bringing it down now to February. So in this case, opening balance, we will put it at the end of the balance. Let's now assume let's say we had 0, and then on 2nd of February you withdrew money from the bank, so we call it bank withdrawal. You withdrew money from the bank, let's say an equivalent amount of maybe 10,000. So in this case we will put the money now under the column E, where we have cash in, so we'll say 10,000. So for this column G to show our balances, we will have now to input a formula. And now here is now how you input the formula. You're going to say is equals to the opening balance plus the amount that you've brought in minus the amount that you will bring out, or the amount of money that you will spend, and then you put enter. And as we said in our Excel part 2 video, when you want to drag the formula below, when you want to duplicate the formula that you've inputted under cell G row 6, you go to the right hand bottom corner, you will see a plus sign. You click on that corner, and then you drag the formula below. So as you can see, for now we've not spent this 10,000 shillings, so it's still showing all through as 10,000. So now let's start spending. On February 3rd, let's say you paid electricity bill. Electricity bill, let's assume you paid 2,500. So you input it under column F, whereby the column S represents cash out. Now the expenses, how you are spending the money. So when you put 25,000 shillings, automatically you will see in column G that the money will reduce. You click enter, and you see the money has reduced. So you continue doing that. We say maybe the same day you paid maybe water bill to the tune of maybe 500 shillings, and then on 4th you paid for your own transport, or maybe transport to deliver supplies maybe. Then you said maybe you paid 200 shillings maybe. So as you can see, every time you input an expenditure or a bill, and then you input the amount under column F, which represents cash out, the amount of money keeps reducing. Then there's this, let me show you another how this formula works. So when you go to now, let's say yesterday, which was 7th, let's say a supplier paid, or maybe someone who had your debt brought you some money. So let's say maybe David payment for purchase of maybe what would you say, maybe a shirt. So they've given you cash, you come and put the figure under column E, and then you see maybe the amount of money for that shirt was 2400 shillings. This money, this is now an addition to your balance. So the figure at column G, cell number 10, when we put the income that has come in now for 2400 shillings from David, this income will have to increase. So let's say enter, and as you can see, the money, the figure at the end of the day is changing. So this is just a short cash book analysis you can use if you don't have softwares to use. So let me know what you think about it, and give me comments and reviews and what you think and anything that you've been struggling with, and I'll assist you to be able to maneuver around it